Back in early 2020, we were actually quite active in the first quarter. And when COVID hit, I think all of the direct managers spent a lot of time focusing on addressing the liquidity needs of their portfolio companies, working with their private equity sponsor relationships to make sure that those companies were well positioned to deal with what many expected was going to be a long-term issue. But in fact, it turned out to be a very different type of recessionary dynamic, haves and the have-nots. Certain industries were very, very severely impacted. So areas like oil and gas and travel and leisure, restaurants and retail were all very severely impacted. But historically, we at Churchill have not been an investor in those areas. So in many respects, the COVID-19 crisis, from an investment standpoint, kind of helped validate our thesis of investing with more traditional companies not in those areas more heavily affected. I think the big surprise for all of us was how quickly things rebounded. By the fourth quarter of last year, we were seeing significant activity, and in fact the private markets saw a record quarter in the fourth quarter, and we, Churchill, saw a record quarter of investment activity. And fortunately, it was generally with companies that were not COVID impacted, and sponsors were paying high purchase multiples, so we were seeing significant equity, generally lower leverage for companies not impacted by COVID. So the fourth quarter was really kind of the optimal conditions, if you will, and we were quite active. If you look at the pricing today, it sits still better than we saw roughly a year ago, pre-COVID, and interestingly enough, significantly better than the liquid markets. We're seeing a wider premium today in the middle market lending space relative to the BSL, the broadly syndicated loan market, upwards of some 200 to 300 basis points better than the liquid loan market. So I think we're going to see a very attractive time to be investing in private credit as the economy comes out of COVID and people get back to work and back to traveling and doing other activities. I think that's a good thing from the standpoint of an investment.